Hello traders, this is Fawad Razakzala, market analyst for City Index. Today is the 23rd of April. So the markets are in a rally mode following comments from President Trump regarding China and after he dismissed the prospects of firing Fed Chair Powell. His optimism has led to a sharp rally in equity indices across the world, with the S&P 500, as you can see here, rising noticeably today. It is coming up to test this key resistance area, and with trade uncertainty not completely over yet, we could well see some selling pressure come back into the markets as indices test key levels. So let's have a look at a few major areas of resistance. On the S&P 500 chart, this shaded region here between 5,490 to 5,500 area, previously a key support and resistance area, has been tested previously earlier this month, which held, and we have ratted once more. Let's see what happens around here. We also have a bearish trend line to keep an eye on around that area, connecting the most recent highs. Now, in the event that the bearish trend line breaks, we could well see some further upside follow through, potentially all the way to 5,695, which is the low made on the election day prior to the index breaking to new record highs. So that level is now broken, obviously. It could turn into resistance, as we have seen in the past, but the key question remains, can we get there? In terms of support levels to watch, well, this area right here between 5,272 to 5,296, shaded in light blue, is interesting to watch given that we've seen some price action around it. So we could well see a potential retest of that area in the coming days, especially if trade uncertainty does not go completely away, which I think will be the case. Below that, we have these levels marked on the chart, but the long-term trend, this trend line that I have drawn, connecting the lows from 2020 with 2022, and this low right here that was made in October of 2023. I've extended that line and I've added another line connecting the bodies and the wicks of the candles. Basically, is this shaded blue support trend area, if you can call it that, is what's really important insofar as the long term is concerned. So right now we can see that the index is holding above this. So the long term technical outlook is clearly still bullish. It's just that in the short term, we're not sure whether this recovery that we've seen in the last couple of days has the legs to take out this short term resistance trend and move significantly higher from there. Let's move on now to look at some of the other global indices, and I will start off by looking at the German DAX index. So the DAX has been coming back quite nicely in recent days because of reduced concerns about trade uncertainty, but it's now testing this area of resistance between these two levels. As I move this across, this area was previously support here before that big breakdown we saw earlier this month, and now it's being retested from underneath. So we could potentially see a bit of a bounce from there, and we're bang in the middle of the 61.8 to 78.6% Fibonacci levels, which happens to be in that zone as well. So it is testing a very important area of resistance right here, I would say. If the sellers were to come back here, I would expect the index to potentially ease back down to test prior resistance around this sort of area, which could then lead to a potential bounce. But it is essential to trade from level to level given the uncertainty in the markets and the nature of trading right now, with markets being exceptionally sensitive to news, and in particular from Trump. Unsurprisingly, with risk assets rallying, we have seen a sharp drop of 3% in gold prices, down sharply for the second day in a row after finding resistance at the psychologically important 3,500 level, which was also an all-time high. So the sharp two-day pullback means that gold is now down by 6.8% from the all-time high, which is roughly $239 at the lowest, which is a decent move to the downside. But the trend is clearly still bullish in the long term. So could we see dip buyers dip back in when gold gets to some support levels? Well, The key levels to watch now include 3,245, which is the first level of potential support I've marked on the daily chart previously. Below that we have 3,167, marking the previous high made earlier this month before we broke above it, where we also have the 21-day exponential average converging. But for me, the line in the sand is the short-term bullish trend line, which comes in at around 3,100. I'm not necessarily saying that we could get there, but if we do, we may well see a potential bounce of some sort. The long-term technical outlook will only turn negative if we start to print lower lows and lower highs. With that in mind, keep an eye on 2,956 level right here, which was the most recent significant low prior to the precious metal breaking to new record highs. So for as long as that level remains intact, any short-term pullback that we are seeing should be taken with a pinch of salt. However, if that level breaks, then you'd have to drop your bullish bias, at least in the short-term outlook. Now, for more market insights and analysis, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.